Friday, September 12th. Happy Friday. You know, hey, for those that celebrate, we got a lot to go over today. I'm going to go over my portfolio. So I'm going to tell you the trades that I've taken recently. We will go over Alpha Picks because I will make one big pitch for you in Alpha Picks. Why? I'm going to give you 3 reasons to get into Alpha Picks. Markets go higher. Are we in a bull market? The answer is yes. How long will that last? It seems silly to me right now. We're going to go over turtle trading and TrendSpider because I brought it up yesterday. But now TrendSpider has an entire store where you can import everything. And I'll give you for the weekend, go and get your TrendSpider 2-week trial. And then you just set up the turtle trades for 2 weeks. See if that works for you. Open Door went nuts. Just crazy. Everybody's winning. FOMO is out there. I'm going to give you a couple of YOLO trades like Open Door that I've given to folks that could still be in play. China, if you haven't noticed, China is actually outpacing the US. We will go over Micron. How did I find Micron? Well, it was Seeking Alpha. We'll go over Al Michaels, sportscaster extraordinaire on CNBC yesterday. We will go over a couple of things, including a triple leverage DTF that he's held since 2010. And my prediction for this year has kind of turned out to be true. A watch list, crypto stuff, and then probably the best AI play that's out there. So big show for you. First off, I want to thank everybody because there's been a lot of positives out there. This was from Chris on Spotify yesterday. I know there are new listeners every day that come here. You are welcome. This is a safe place. The OG folks know everything. They know half the time I'm full of shit. Don't worry. It is a safe place. I am the dumbest one here. If you are new, I am not smart. I am just somebody who's not afraid to go and learn. That's all I do. I make mistakes a ton of times. That's what it's all about. You don't know about trading unless you've made mistakes. Shut off your Netflix, go on YouTube, type in some crazy stuff, or here's a better idea. Go and download an AI program like Perplexity. And just start having a conversation. Remember, when I started learning about this stuff, it was 40 years ago. There was no Google. There was no YouTube. There was no email. There was nothing like that. You had to call a broker on the phone. If I can learn that way, you can learn in today's society. And it's so simple. But Chris here, just 2 months in, with Seeking Alpha and suggestions from Gary, my portfolio is up 67% as I continue to educate myself. I will be adding Alpha Picks and TrendSpider to my arsenal. Please keep talking about these tools. You mentioned Open Door a few weeks ago, and I bought 100 shares YOLO. Again, it went nuts. Oh, and by the way, I got this September watch list. Again, this one is up 7.37% just since I published the list. The entire list as a whole is up 7.37. The big winner is clearly open. But there are 4 stocks, okay? There are 4 stocks that are up nearly 20% and 3 stocks that are up 10%. And you want to know, from a perspective of just a side note. Boom. Let me rephrase that. A side note. August watch list. It had a stock that was up 100% as well. So it wasn't just this watch list of September. It was August as well. Now, my portfolio review. We're going to go over this in a little bit, but I'm going to go over my portfolio review, and we're going to just look at charts. Because I went over my portfolio yesterday, the full portfolio, and I've been doing this a lot because we're at all-time highs, and it's scary. I only have 5 losers in my portfolio, okay? 4 of them are Alpha Picks. Now, understand, Alpha Picks has like 40 stocks, and we're going to go over that a little bit. 4 of them are currently losing. I'm the only losing position that I am currently in that today is actually positive is coin. So that losing position will probably be positive. How did I find coin? Well, 4-hour algorithm. I bought it at 320. Where are you? 324 right now. Where are you in pre-market? 328. So I forget exactly where I bought it, but it was around 320. And I continued to lose Again, the thesis was long-term. I'm not worried about it. The 4-hour algorithm makes me 328% versus 311% buy and hold. So I said, you know what? It's putting a floor in around 300. I'm willing to go in. That was my only losing position as of yesterday. Okay? Part of the reason I own Coinbase, because I own quite a bit of ETHA and IBIT. Where's that crypto stored? It's at Coinbase. So again, there are reasons to do that. There are reasons to hold on to it. But the point is, I am cutting my losers and I am adding to my winners. Let's talk about recent trades I've done. And it's for different reasons. BMNR. I got into BMNR. This one in pre-market is up another 4%, close to 50. I got in there for reasons. I journaled it. We talked about ETHA. This is Ethereum. I bought that one recently. I've talked on here about Hood, how I got into it. It was added to the S&P 500. Boom, I'm in there. I've talked about PSIX. I'm in there. That's positive. I've talked about UNFI, how I've gotten into that one and how I've added to it as part of the Alpha Picks portfolio. It's been going phenomenally. And finally, I talked about IREN. These are all stocks that I have added in the past few weeks. And there are 3 more Alpha Pick stocks that I added in large amounts. So yes, I've been trading and I've been adding, and I'm making sure that any losers that I have are out of my portfolio. Why? We're at all-time highs. You don't want to hold on to losers. Remember, a 50% loss takes 100% gain just to get back to even. So you better know what you hold in your portfolio. And this also points out, by the way, there's only 4 Alpha Picks that are down. I started investing in Alpha Picks in August. And you might say, if you're new, well, what's Alpha Picks? Alpha Picks is a data-driven portfolio where they give you stocks on the 1st and the 15th. We're going to have one next week. It has outperformed the S&P. I've been in this about 1 year, okay? I only have 4 stocks that are negative. There are 42 total stocks in the Alpha Picks portfolio. 4 are negative. I own all of these negative stocks in my portfolio, but I own them even less than what the portfolio says is a holding percentage because they have been losing stocks. The total, and I will give you, my portfolio has 3 commas in it. Okay, there are 3 commas in my total portfolio. The total loss, okay, of each of those stocks, the 4 that are in Alpha Picks, one has a loss of $4. The biggest loss in those positions is $225. So it's not like I'm losing a ton of money. Meanwhile, the flyers like AppLovin and some of the other, they're up huge. I've cut the losers and I've added to the winners. That's how I'm managing this portfolio. But I'm making sure when the Alpha Pick comes out, I'm buying at least 1% of the total portfolio. So why might you want to get into Alpha Picks? Well, let's talk about it a little bit. We saw yesterday how the market loves rate cuts. I continue to say it's a bit worrisome that we're getting rate cuts into a market. If the jobs market breaks down, that's not good for the economy. But if the market is going to go up, I'm here for it. And part of that are small caps, because as we've seen in the past, and it is historically true, go and ask AI, do small caps outperform when the Fed starts cutting rates? As a large cap tech investor, I've been steering more of my portfolio to the Alpha Picks portfolio because I'm not a small cap guy. Know your role. And the Fed rate cuts, that's a catalyst that is coming. We know it. It's a catalyst. We talk about catalysts all the time. And you want to see somebody who thinks that small caps will outperform? Well, yeah, Dan Niles. He's talking about it here. This entire post is about, hey, the actual rally, it's going to broaden out. Does this mean you go outside your comfort zone and subscribe to a portfolio just based on what I say? No, it's not based on what I say. There are three things I want to point out. First reason, the performance. Again, backed against the S&P, you can buy VOO and you can make 69%. Okay, or you can buy out the Alpha Picks portfolio and get 217%. So it's never guaranteed, but the best time to get into any portfolio is right now. Even if you're going to go down, it's right now. That has been shown over time. If you need some portfolio management training, this is one of the things that Alpha Picks has taught me about portfolio management. It's rules-based. You need to have rules around your portfolio. They outline when and why they sell. They also trim some of their big winners by putting the profits back into the overall portfolio. It's a great management process. And then the third reason you should get into this is because it's easy. Again, you don't have to think about this. You don't have to understand the stocks. All you have to do is know the stock pick, buy it when it comes out on the 1st and the 15th. And then if you want to add to it, you can. If you want to cut it, you can. It's easy. So again, the performance, portfolio management, and the ease and convenience of Alpha Picks. We'll go over more about some things, but again, read Dan Niles' note because he's telling you that the market, the breath is going to come, and it's probably going to come from small caps. Now, do the markets go higher? Ryan has been more right than he has been wrong. Okay? Look at the Dow. It hit 46,000 for the first time yesterday, the first time ever. It hit 45,000 more than 9 months ago. The past few times it went at least 6 months without a new 1,000 milestone and then made one. It made multiple new 1,000 milestones quickly. Go and track the Dow. Okay? He gives you all the numbers here. So do you want to buy at all-time highs? If you are getting into the market, it's not a bad thing to buy at all-time highs. You've just got to be a little bit careful and understand when you're getting in. Because bull markets can last a very long time. This bull market is turning 3 years old. As we've noted many times, this is still a rather young bull market, and history would say that it is likely many more years left. The past 50 years had 5 bull get past their second birthday, and the average was 8 years old. The shortest was 5 years. The shortest was 5. We're 3 years in. So again, are we in a bubble? I will add, remember I said it yesterday. It's crazy that Oracle, a large cap tech stock, added 40% to their market cap in one day. From a simple IOU, from a company that is not currently making enough revenue, not profits, revenue, to cover the bill of the IOU that they gave Oracle. It's crazy. But if it's a bull market, I'm here for it. So again, you just have to make sure you're comfortable with the risk. And part of that risk, maybe it's turtle trading. Go and Google turtle trading. Okay? TrendSpider put together an entire store for you to import the entire turtle trading strategy into your setup. Remember, these guys, the turtle traders, they turned 5,000 into over 100 million. It's from discipline and risk planning. They found opportunities through strategies and took them. These tools automate everything for you. They literally tell you when to get in, when to get out. That's what the strategy does. And if it's back tested over 15 years, that's pretty damn good. Okay? That's pretty damn good. In fact, one recent one is Tesla. The original entry last week, down 2%. Re-entered Monday at 354, stock now pushing 370. Again, scratches the losers. It gets out before it drops too much. It lets the winners run. So this whole strategy is explained. I put it in the newsletter yesterday. You can go to TrendSpider and look at it. One that went crazy, okay? Open Door. And we're going to look at Open Door right now. Because Open Door is the YOLO trade that I put out there. And I said, I want to get into this one. I never found an entry. I am out of this one. I am not in. Okay, the 4-hour algorithm outperforms buy and hold. It's based on this current, let's see, that was 262%. Let's move it up to today. That's 316%. We're pushing just down towards $10. I would say if you can get in this under $5, get in under $5. Why? The reason is because of the salary of the new CEO. They added a new CEO and some board members. The stock took off. It was up crazy yesterday. But the actual equity that the new CEO is taking, it's all in stock. So guess what? The stock is probably going to be manipulated so that it can go up. You don't care that it's manipulated. All you care about is this actual stock price. But I will tell you, this is not one where you take your entire IRA. If you are the degenerate in Robinhood who is betting on Alabama this weekend because they're an underdog, and you're betting your entire IRA, you're better off putting it in Open Door. I'll just put it out there. You're better off putting it in Open Door, but do not be that guy. Now, I want to also point out that you can zoom out here, because you can zoom out on Open Door on a weekly chart, and we're up above the 200-day. The 200-day is at $3. The 50-day has just started to turn around. Now, is it crazy that you could get back to this 26? Remember, Eric Jackson is talking about $82. This week's candle alone is up 50%. Last week's candle was up 57%. The week before, you might have got in the week before and you were like, oh my God, I'm down 10%. You didn't care. Even if you bought at the high at 587, you've almost doubled your money right now. So is it a great investment? No, this is still a trade. This is still a trade. And you can have FOMO over everybody. I am looking to get in. This is crazy because everybody's winning. Someone gaining over $8 million yesterday on a trade on Open Door. And let me put it out this way. Everybody is winning. FOMO is real. Yesterday, I was recording the podcast and I put it out there that Bloom Energy is probably a pretty good one. Okay. And I put it out there. We're going to look at the after hours. I put it out there around 8:30. Hey, Bloom Energy is not bad. It was at $63. Okay. I said it had 66 in it. Got all the way up to 68. Somebody in the audience gave me a nice tip yesterday on Venmo because they said, hey, Bloom Energy, I took the risk, gained 10% in like 15 minutes, and boom, I'm just tipping the bartender. So you may say, well, all of those are in the past. Let me give you another one that's in the past that probably still has more room to run. It's Fannie and Freddie. Howard Lutnick said Thursday that government-sponsored enterprises could possibly go public as soon as this year. Okay? This is from June 4th. YOLO trade. Fannie Mae was down 13% and below $10. It's up after hours. Did you buy the dip? That's at $10. Let's go and look at Fannie Mae. Where are you today? 1581. Again, that's a crazy move. This one, the 4-hour algorithm got you in here at $8.53. You've almost doubled your money. This market seems silly. Again, it just seems silly. This is not normal, but it's time to take opportunities. And you want to make sure, again, do not hold on to your losers. If you start to see a loser and you haven't identified the reason why you're holding it, then make sure you know that, because this market can get the rug pulled out of it in an instant. And you're just going to want to know what you're holding. Now let's talk about this. Is this another DeepSeek moment? Because this could be what takes the market down. Alibaba and Baidu utilize in-house chips to train AI models. I had brought up yesterday, Baba was a pretty good deal. It was up 8% yesterday. Baba soared. Okay? And I brought up, hey, as long as you get past this 120, that's support. Now we've got the 140s as support because that's a previous resistance level right there. Not all-time high, but it's a resistance level. And you can see all I did was take this from previous all-time highs and put it there. And it looks like here in March, we pulled back from there. So where am I looking at? Yeah, this weekly candle, the low is 138. Currently, you're trading at 155. Would I be buying at 155? I don't think it's a bad deal. Again, if you want to buy that. But let's look at some other opportunities because KWEB, which is an ETF that tracks the China internet. Okay, this includes Baba. It includes Baidu. It includes all of that. Had you been in KWEB at the beginning of the year to date, it's up 39%. The US tech sectors, XLK and QQQ, they're only up 14 and 16. China is outpacing us in stock market returns. And what happened yesterday was just, hey, we got chips now too. We don't need AMD. We don't need NVIDIA. And you saw those stocks start to trail off. So it's something to look at because while I haven't gone outside the US, I'm seeing this a lot more. Time to diversify. If you've had a 401k that is balanced with US and international exposure, and Josh Brown talked about this a few months ago, and I brought it up. He said, I opened up my 401k and I couldn't believe it. Remember, if you have a 401k, it's not like you can invest in single stocks. Most 401ks put you in a choice of like 4 or 5 different ETFs. One of them, he said, it was my international fund. And he brought this up a few months ago. He said, all of a sudden, I'm up 60% in my international 401k fund. It's unbelievable the amount that I've made in my 401k. These guys aren't taking a lot of singles. They're not investing in Open Door. You know, they're making fun of Open Door. But know what you own. Look at your 401k. Because is it time to diversify into international stocks? Personally, not me. I'm still a U.S. large cap tech investor. But I brought up many times, Micron, set for 7 straight days of gains. 7 straight days. And I went over this earlier this week. It's up 17% in the last few days. Up 17%. How did I find this? Well, when you go to the homepage on Seeking Alpha and you scroll down here, what's the top quant stock by market cap? It's Micron. When you go back down here to the top stocks and you look, what's the top stock? It's Micron. It's been up there for a very long time. We can go, when did it turn to a strong buy in the quant? Way back here. 122. I mean, it was at 114, turned to a strong buy, but the metrics weren't great. Now the metrics are really good. What's Wall Street's thought on this? Well, they think it's worth 151. Where you're trading 154. If you didn't get in at 122, why not? And so when we look at Micron, you add in the other tool that I have. Again, that's all part of Seeking Alpha Premium. We went over Alpha Picks. Seeking Alpha Premium has those types of things where you can find stocks before they run. And again, it goes back to Chris's comment at the beginning. You talk about these tools all you want because they make him money. And here in TrendSpider, where the 4-hour algorithm had you in 121, it was a strong buy in the quant. Kind of made sense to buy it. Did I? No. This one didn't fit my risk profile. I didn't want to add to it. 4-hour algorithm actually beats buy and hold. 26 positions over 24 months. It just got you out of a 75% gain and an 8% gain right there. Is this one ready to run again? I don't know. I'd tell you, if I look at a monthly chart, I'd tell you we're just back to where we traded. We came off that level in June of 2000. That was $97. We've just broken through that. So is this one ready to run? Do your research, find your tools, understand what you own. Now, I will tell you yesterday, this is Al Michaels on CNBC. I wait for this all year. It's the annual, hey, the first Thursday night game is on Prime. And Al Michaels goes on CNBC and talks about stocks with Josh Brown, his favorite analyst. Last year, Josh Brown pitched eBay. He pitched eBay to Al Michaels. Well, let's see. Was eBay a good one? In, October, November. We'll go back to September. September, it was trading at 59. 59. Today, it's at 92. That's a pretty damn good pitch. What did he pitch this time? It was Home Depot, okay? Home Depot. Josh Brown thinks that Home Depot's ready to run. Well, that 420 right there, that is the previous 2022-2021 all-time high. We're still in an upward trend. We just got out of this thing. This could be a cup and handle kind of position. So again, do I love that one? No, doesn't fit my risk profile. Home Depot, I'm okay with it down here. If the housing market's going to get a run, that's the thing. Now, Al Michaels said, hey, I've been in this ETF since 2010, and all the traders make fun of him. Man, they make fun of him because, again, this is a triple leveraged daily ETF on the financial business. And you can see in 2010, this was trading at like $7. It's at $180. I always tell people, do not buy and hold triple leveraged ETFs. There are some that are just better than others. And again, if you believe in the financial sector, and Al Michaels did, he holds quite a bit of this, he said. And I will tell you, back in December, I published this as a 2025 prediction. Okay, this was my third prediction. The third prediction is the triple leveraged ETF, TQQQ, ends the year higher than where it started. Okay, 2011. This is just a yearly thing. There were only 3 years when it was down. 3 years. They were down huge. Again, 2022, you were down 79%. But I said, hey, in a market like today, where we're in a bull market, is it a good one to bet on? Well, where was the beginning of the year? Let's just look. January opened up at 49.35. Where are you today? 95. You've almost doubled. So again, am I a genius? Probably not. But you look at the gains in 2023 and 2024, those were really good gains. So as long as we're in a bull market, again, do I suggest this? No. Humphrey Yang points it out perfectly in this one. Remember, it's about timing this thing. These kinds of things can work out like they did for Al, but you're going to deal with huge downturns. It's mistake number 2 in this video from Humphrey. And he goes over the actual returns say different in some instances. It's about a loss of 50% takes a 100% gain to make it back. But some of them have worked out better than others. So pick your poison, understand what you're investing in. And maybe, you have a 180% gain like Al Michaels does. But again, I would argue he's had a better chance, of investing in other stocks than FAS. Now, you want a watch list? Here's a huge list of names. Market leaders, young growth leaders, speculative leaders. Oklo, MP Materials, Rocket Labs, Tempest, which Nancy Pelosi is in, Celestica, which I'm in big, Bloom Energy, which I just went over, IREN, which I own, and I traded, Nebius, which we've gone over, VSAT, which my friend works for, Micron's up here, Oracle, Baba. Again, there's a lot in this list that makes sense. So find them, do your research on them, understand what you hold. That's the way you make money in a market. In today's market, it's just silly. If we start to pull back, you're going to want quality names. And one of the things, I'll just say it right here, Winklevoss. You want lacrosse playing rowers from Ivy League schools? That's a Winklevoss. Winklevoss, their Gemini crypto brokerage, crypto exchange, Gemini Space Station, GEMI, raised $425 million. They went out at a range of $24 to $26. That was what it was. Okay, they priced it yesterday at $28. Yesterday, FIGR, which is Figure Technical Solutions, again, it's a stable coin thing. It went up like crazy, but it came back. And so you want to understand exactly what you're investing in. Look at that stock. Poor guy bought at, let's see, 37.08, he's never had a chance to actually gain money because it could just continually went down. Somebody bought it at 37.08. Somebody thinks it's worth it. I like to wait for these things because I like a chart that I can tell what's the trend. You can't tell a trend from an IPO. You can't. But if you believe in it and you want to buy it, go out and buy it. We've seen some of these crypto exchanges just pump. Now I'm going to give you one of the best AI plays right now. If you haven't heard, Microsoft actually owns a large percentage of OpenAI. OpenAI just pledged $300 billion to Oracle. They don't make $300 billion in revenue, not profit, not revenue. But they've now turned a corner because they redefine their ties with Microsoft and they shift to a for-profit model, which means they can raise a shit ton more cash. And then every time that OpenAI's valuation goes up, guess who benefits from that? It's Microsoft. And Chris Camillo is here for it. He's basically telling you it's a big play. Now, he has been more right than wrong. So I like listening to him. But again, this is part of the reason why I don't think that Microsoft, which had a buy in the 4-hour algorithm yesterday, I don't think it's a bad play. At 507, am I happy buying it? No, I already own a bunch of it. Okay, but I bought my parents more in their portfolio. They felt like they didn't have enough. My brother works for Microsoft. They were like, yeah, we don't have enough. We sold a bunch at 400, I think, before their earnings earlier this year. And then they pumped. You know, everybody was worried about these earnings. They pumped, they gapped up. My parents wanted out. How did I play that one in my parents' portfolio? I said, listen, I'm going to get you out of Microsoft, but I urge you, let's just buy QQQ. And they said, okay, thank God, because again, QQQ owns Microsoft. Cash is not a position you want to be in. So when you pull it out of something, understand, for me, I want to find a better investment, and I don't consider cash a good investment. So that's how I played it. Now, do you think Chris is right? Maybe. Maybe he's wrong. Maybe Microsoft is going to go down to $250. Maybe, they pull back some of this AI cap spending and they lose ground to Google. Maybe they stumble. Who knows? The market will know. So is it a good opportunity to buy in the 4-hour algorithm? Well, 4-hour algorithm makes you 49.9%. 52.8 is the buy and hold over the last 2 years, 24 positions. Okay, your average win is 7%. It's not going to make you millions of dollars over an investment, but Microsoft, for me, it's a pretty good long-term investment. It's about risk reward. I think they hold a ton of the OpenAI value. And that, to me, isn't priced in. The average price target is $615 on this. That's 22% upside. Now, I will tell you, back here, when it was slipping in March, everybody's like, oh, yeah, they're not done. At $300, you had your golden cross here, and you were trading at $453. You got all the way up to $539. Let's see, what's the 52-week range in this one? $555. So $555 is in the stock at 500. It makes sense to me. If I didn't have a large position, I'd probably be buying this. Now, I want to point out too, Seeking Alpha Premium. It comes with some stuff, but this is kind of cool. They started this Friday trivia. I like it. One of the trivia questions was down here, and I'm going to show you my answer. Well, I don't want to show you my answer, but I want to, I forget which one it is, but the Dow Jones Industrial Average topped 46,000 this past week for the first time ever. Which component has seen the biggest rise year to date? Is it Nvidia? Is it Goldman Sachs? Is it Johnson & Johnson? Or is it Boeing? Go and take the trivia. I got it wrong. Just full disclosure, I got it wrong. I was choosing between 3 of the stocks. I knew it wasn't, one of them. And I won't tell you which one. I won't guide you. But I like that. Now, part of this is having Seeking Alpha Premium. And there's a bundle out there. Premium and Alpha Picks come together. You save $159. It is the greatest bundle out there that I like. Because this, along with TrendSpider, gets you everything that I use to manage my portfolio, to find these stocks, to understand exactly what I'm doing in the market. It's all there for you as well. And you can get it at Linktree. The top link is the TrendSpider stuff. Get a trial over the weekend. Seeking Alpha Bundle is the second one. Again, you save $159. The third link is Seeking Alpha Premium by itself. Doesn't include Alpha Picks, but it comes with a free 7-day trial. The hack is you can go out there, get the Seeking Alpha Premium, go get the top 2025 and second half top 2025 stocks. They are performing phenomenally. Yesterday, the top 2025 stocks as a whole up 1.48%. As a whole, the second half 1.64%. Again, what was the S&P up? It wasn't up 1.48. It wasn't up 1.64. So make sure the weekend homework that you want is to make sure exactly what you hold. We are at all-time highs. It's a little scary. Even Sam Altman has called this a potential bubble. Reminds me of when Elon said his Tesla stock was a little too rich. The stock price is a little too high. Just feels that way. But it doesn't mean I'm pulling out. It means that I know exactly what my downside is on everything that I own, and I have alerts set up so I don't have to sit there and watch it every day. So there's your homework. If you have any questions, again, even my email address is up here on the link tree. You can get the newsletter for free. I'll have everything linked in the article, in what I just went over in the newsletter. Welcome to all new, all OG. You guys have a great weekend. I'll talk to you Monday. See you, bye.
Every morning I wake up to the sound of the trading bell.